Hey, hi everyone. This is Dale Anderson from Fabric Invest. Hope you're keeping well. Just wanted to share with you the latest market news. We've just had the latest Zoopla index released end of August. So this is the July 2021 Zoopla index. For those who don't know Zoopla, they're one of the largest real estate or property listing platforms for both sales and rentals. So they run a housing index. And they track the house price movements as well as rental movements within the UK. So I'm just going to share screen quickly just to run through. Just bear with us. I'll put that on full screen. Full screen. So yeah, so just looking at what we mentioned last time, UK house price is still very buoyant even after the stamp duty holidays ended. We're seeing plus 6% current UK house price growth average for the year. There's been a 21% demand for homes year to date, so a massive increase in homes, and a minus 3% flow of new supply to the market. So what is this saying? A total stock of homes for sale is 26% down from 2020. It'll remain low well into 2022. So again, there's a lack of supply coming to the market, fueled by an increase in activity within the market. So there's been a high number of sales in the last year, but this has eroded supply, and there's a rise in activity amongst first-time buyers and investors. Obviously, people are looking at the borrowing rates. We're in a historic record low borrowing rate environment, largely due to Brexit and the pandemic. Interest rates have largely been quite low in the UK since the global recession of 2009. I remember it very well, as I was in the property industry then. But yeah, supply constraints most evident for houses, properties price up to 350. The mismatch in demand and supply supporting price growth, which is at 6% in July from 2.3% in 2020, and average price growth for houses at 7.6% compared to flat. So we are seeing a shift to housing. However, for yield investments, city centres, I mean, we're sort of now rolled out the vaccine, things are getting back to normal, so you're still getting better yields on apartments as opposed to houses, but certainly from a domestic standpoint, people are looking for a bit more space. So the market's moving nearly twice as quickly as 2016, with the time to sell 26 days down from 49 days. Lower supply of homes listed for sale may lead to a natural slowing in buyer interest, albeit at high levels. So we're getting to a bit more of a normalized market after the stamp duty holidays, so things are slowing down slightly. So yeah, annual UK house price inflation rises. We've seen 1.4% in 3 months to the end of July, taking the annual rate of price growth to 6%. The average value of homes across the UK now standing at £234,000. Price growth highest in Wales, North Ireland, northwest of England. So Liverpool's leading the way, and there's also been very good growth in Manchester, as well as Belfast. So London's still trailing in terms of growth. And yeah, so this is a chart that you can see here, the highest price rises in markets with lower average values. And there you've got London, and you've also then got the other areas, and that highlights the growth as compared to the the value of the houses as well. So very interesting. The rise in home values is being underpinned by the fundamental lack of supply in the market. And we expect that headline rate of growth will start to moderate towards the end of Q4. It'll be a linear progression, so it will be a quite slow process. We expect house prices to show an average rise of 4 and 5% for the whole of 2021. So again, lower levels of supply, minus 26%, total stock of homes available for sale. So there's just not enough stock coming to the market. People are not listing. New build developers are holding back because build costs are flying through the roof at the moment. Things are a little bit unsettled for them, so they're just waiting for inflation to stabilize. There's several factors, the sheer level of activity in the market and demand. People are moving. People are realizing they don't need to be in the city centre of London. They can live further out. Flexible working environments, employees being more flexible, where a lot of staff, especially in the tech industry and people that work online in front of a computer, don't need to be at a desk 24/7 Monday to Friday. So employers are becoming more flexible, which is allowing people to change where they live and look for possibly more space. So yeah, a lot going on. There's been a reassessment of homes amongst households. This has created a churn in the market in terms of buyers and sellers. There's also your buy-to-let investors looking to capitalize on the low borrowing rates at the moment. They can get a tenant in paying rent. The rental market's extremely stable. Occupancy rates are very high in major cities, and this creates a perfect environment for these investors. So average price growth for houses, higher than flats. However, flats still being more affordable and are providing better yields. So we believe that will normalize, and you've still got your young professionals living in the city. So definitely a shift in demand from people who maybe have children or a young family, now moving a little bit further out the city for that extra space. So on that, minus 11% new home completions in England. So that's the second key factor, is the increased levels of activity amongst first-time buyers and investors. First-time buyers account for around a third of all buyers that have been increasingly active in 2021. Lenders tightened credit criteria and increased mortgage rates or high loan to values in 2020. That squeezed some first-time buyers out of the market. This has been reversed and supported more first-time buyers in the market. Continued stamp duty relief for first-time buyers means obviously the end of the stamp duty holiday will have less of an impact. The activity seems so far this year is likely to continue due to pent-up demand after the first lockdown last year. So I think a lot of people have been working from home and not going out as much and spending as much disposable income. So a lot of people have probably been saving and they have more additional saving now. At least those who have maintained employment and still been earning now have a little bit extra money in the bank from working from home. So, a lot of investors and buy-to-let investors taking advantage of the low tax charges, interest rates, stamp duty. Demand from buy-to-let investors in the year to date has seen some 21% higher compared to 2020. Strong demand for rental properties is likely to continue. So a lot of investors can now travel. They can come to the UK. We're getting investors from Hong Kong, the Middle East, South Africa. They all got their reasons and motives, but the UK for them is an excellent proposition because they know that their rental income will cover their mortgage, or they can pick up some really good deals and get yields of 5-6% in the northwest, for example. Plus, they're going to have the uplift and the capital growth over the next 4 or 5 years. So strong demand. Ending of the stamp duty holiday, that's had an effect. A final factor is the supply of new homes, which has slowed significantly. So you can see share of sales, mortgage home movers, mortgage first-time buyers there in purple, cash owners and investors, and then buy-to-let with mortgage. So 7.6% average rise in the price of houses. Flats, obviously, prices slowing down, but investors looking for buy-to-let yield apartments are still very attractive, still very good demand and lack of supply. And that really sums it up. 26 days average time to sell. So the market's moving faster than usual, again, due to lack of supply. Not all markets are moving at the same pace. As you can see on the map below, it's taking much longer to sell homes in and around London. It takes 56 to 75 days, whereas other areas in the UK are taking a lot quicker to sell. So that's a map there, which will show you average time from listed home to sale agreed. As you can see, like the northwest and some of these northern regions or southwest regions are, compared to London, the average time to sell has been a lot quicker. We're certainly seeing a lot of demand. I think we've sold over 100 properties through the pandemic and over the course of the last few months, and that's primarily in cities like Manchester, Liverpool, Preston, Leeds, Sheffield, and other areas. Outlook: the low supply of homes listed for sale, especially houses, a limited choice for would-be buyers, will impact demand into 2022, leading to natural slowing in buyer interest as buyers look to move to this type of property or wait for a suitable property. End of stamp duty holiday. So things will probably stabilize and normalize. I mean, the price has been going crazy this year, which nobody really expected. So that's due to reassessment of people's interest in where they want to live. So places in the north, for example, we can still pick up, decent apartments anywhere from 100 to 150,000, or even a house. Liverpool, top of the rankings there at 9.5% growth this year, followed by Manchester, 7.7%, Belfast, Sheffield, Nottingham, Leeds. So these are all areas at the top sort of 5 or 6 there would be certainly interested due to the optimism in the market and ever-changing landscape of the real estate sector, plus price growth. So that helps. We always available to speak and run through the latest market news and let you know what's happening in the market. Also identify opportunities that we do have in some of these cities, such as Liverpool and Manchester. I hope that helped. This is the city index as well, so that will explain to you the index with the pricing increases, the monthly trend, as well as the annual trend. So we're a knowledge-based consultancy. We're always doing research. Before we put a property in front of you, we want to understand your goals, what it is you're looking to achieve, and then we can look at the market fundamentals and lead you in the right direction, whether that's an apartment or a house or whatever you're looking to do. We're here to help. So get in touch. I hope that helps. And I'll be keeping you updated. Thank you for your time and all the best.